Mr. Mark Selby, how are you, sir?
Excellent, Mr. Matthew Gordon.
Glad to hear it. You've had a busy week.
I have, and I also got my second jab, so I'm well on my way to rejoining the world population. So it's very exciting.
What did you have? Which one?
In Canada, I got a little mix and match. So I got AstraZeneca for my first dose, and now I got Moderna for my second dose. And I was supposed to get Pfizer for my second dose, but a shipment of Pfizer got delayed, so that everybody in Toronto over the last week who was supposed to get Pfizer's just got Moderna instead. So
does that work? Is that
it's supposed to work. The mix thingy is supposed to be actually. There's some studies that show it's even a little bit better. So I have a feeling that I'm probably going to end up getting another dose of AstraZeneca and another dose of Moderna, just to make sure it all absolutely works. So you wouldn't want to find out that it gives you a brief thing, but something happens and it buggers the whole thing up. And 6 months from now, I've got Delta virus. So I know I've got a feeling I'm going to get a few more jabs before the end of the year.
Wow, I didn't realize that we could do that. I didn't realize that was an option. Sounds like a nice little cocktail of drugs with some post rationalization as to why it's going to be okay. Excellent work. Well done, Kevin.
Governments have done a good job with that so far during the pandemic. Yeah.
Splendid.
In the absence of leadership, rationalization goes a very long way. So
I like it. He who writes history defines history. That's also a great phrase. So we're back to talk about nickel. So actually, nickel's doing okay at the moment.
Nickel, the entire commodity complex took a kick in the teeth last week. It was a bit of a gang fight. You had a kick in the teeth from the Fed talking about inflation and higher interest rates, and then the SRB decided to pile in and give another kick in the head with we want to take the steam out of the market and we're going to dump some of our reserves into the marketplace to take some steam out of it. So it'll be interesting to see sort of how the SRB does this. This will be they're a much they've been active for a long time, but this is the first real super cycle, in a not super cycle, but significantly higher prices with potential for much higher. So, we'll see sort of, how committed they are and sort of how aggressive they'll be. There's the old adage of, don't bet against the Fed. So we'll see whether in the commodity markets it's don't bet against the SRB. But the nice thing with nickel, where everyone else was getting kicked in the head with this stuff and have stayed down after falling off, nickel basically bounced right back up again. So we're up over $8 a pound, up over $18,000 a ton. And again, for people, like the key thing is, when you see a drop, if you see a whole slew of consumer buying come into the market on that drop, again, very good sign that, things are going to be the same or better, over the next 6 months. It's when you get this price drop. And then if you hear crickets in terms of the, people stepping into the market, then, get nervous that, maybe we have topped out and we're on our way lower. But in nickel, again, I'm back to the 6 months ago, I thought the market would be a bit getting pretty sloppy right about now, as you'd had 2 quarters of Indonesian NPI production ramping up. Again, I had double-digit demand growth, but thought it would kind of struggle around this time period. But literally every single indicator is heading in the right direction right now.
Don't bet against the Fed for sure, because they're big and they fight dirty. And you're always going to lose for sure. I was quite surprised by that announcement. I was like, in a nice way, surprised by that, because it needed a dose of realism. It needed someone to just be a little bit more honest. And I want to, because normally they avoid those sorts of difficult conversations because the numbers they threw out there were not increments; they were meaningful.
Yeah. Oh no. And again, part of the whole thing is if you manage expectations around prices are going, then it saves you actually having to really raise interest rates. At the end of the day, the Fed doesn't want lots of inflation, and the Fed doesn't want to have to really raise interest rates. So if I can talk about doing it, have the little steam come out of the market, that it's not this isn't a guaranteed one-way bet for 24 months that I'm going to make a lot of money on, then that saves them having to get really nasty later on. So, we'll see how we go. I mean, there's so much capacity constraints, anywhere and everywhere, in terms of, supply of a lot of things. Transportation of a bunch of commodities, or again, transportation costs, all through the supply chain are just crazy high right now. So,
oh yeah, we've had some CEOs talk about it's not just a case of you've got to pay 3 times the amount for a container, but you've also got to get it. You just can't get it. So and the other thing is people are rushing to put in their orders now before the prices keep going. They're just very nervous about getting orders in for equipment and so forth for those prices go up. So people are looking around as like, what is going on? So I actually welcomed last week's announcement for that reason, because we just need to calm down a little bit here.
Yeah. Oh no. And again, it's I don't care what it costs, and I'll pay 5%. If I only have to pay 5% more, then I'm okay. That's how inflation expectations get ingrained in an economy, and which is where the trouble starts. The long-term trouble starts to happen. So agreed. It was totally the right medicine. Yeah. And the China, again, the SRB, if you're piling strategic reserves, these are the times you should use them in terms of, okay, there's a short-term shortage of things. If you think that speculators are sort of taking advantage of some short-term shortages, then dumping a little bit of the stuff that you bought when the prices were $2 a pound for copper or $4 a pound for nickel, and you're now dumping them back into the market at 2x that, then that's a very judicious use of the SRB. The dangerous part is, prices signal the market to create supply. So you don't want to fix a short-term problem if, prices are a little overheated, but then you cause prices to drop below where people can't get their project built. And there is actually not just a short-term supply issue, but a medium supply issue. And so you then you may not get the supply that you need, which again, you can drop a little bit of supply into the market and take out some short-term steam. If there's a fundamental supply shortage, dropping little bits of supply in aren't really going to solve the problem. So that's the balance that they're going to have to try and make is let prices go high enough to create the incentive for new supply to show up, but not get too nutty in the near term and have speculators just shoving the market around.
Absolutely, and I say the other kind of interesting narrative is I've picked up on this because I've had a conversation with a couple of CEOs who said, I don't want to say this on record or anything, but because I was talking about these various ecosystems, battery metals in the context of battery metals, right? I said, where are you going to supply into? Who are you talking to? What's going on? What's the timing, etc. And again, always want to get a sense of who's saying what. And they said, well, it's either Europe or North America, right? Obviously, we've just because of location of where these two guys were based. And he said, well, if we go into the US, the conversation is very anti-China. If we've got anything to do with China in our supply chain, no money, no can-do-ski, not interested, right? Which I thought there's protectionism and there's security, etc. But there's a very small list of countries, and I guess probably companies soon who they will do business with. So it's very, America's still talking the language of a buyer's market. Right now. Whereas the Europeans are recognizing that perhaps it's a seller's market because they've got to be careful about their relationships with China because there's a lot of trade going on there, which is important to some of these countries in Europe, in the EU. And they're saying, well, we can invest in your project, whether that be through export agencies, export credit agencies, or banks, institutions, or otherwise. But you've got to build it here. So we don't mind if China's involved, but you got to build it here. And so I'm just interested in this kind of language. We saw the kind of combative language anti-China with Trump, and during that era, and we've seen it with the uranium space. Particularly, the first time I was exposed to it. And Europe is, the mild-mannered, uncle who's perhaps trying to find the best way of not upsetting everyone, but they obviously want to secure their future too. So I thought that was just an interesting narrative, and the way that those sorts of conversations are affecting decisions of CEOs like you as to who you do business, where you do business. And it's not necessarily a kind of free market in that environment, is it? So what does that do to pricing?
Yeah, no, and I think, the in the nickel space, was underscored. The fact that White House report on strategic metals that, hit the tape about 10 days ago, it, talked about the U.S. government wants to encourage someone to build a nickel refinery in the United States, in terms of building processing capacity to have it there. And that's, spot on about that of the realization that, okay, a lot of supply chains for various metals have to take a step through China, and they do really want to break that path. Now, whether they end up doing that or not, or whether that's a strong enough signal to the market that, okay, there's an underlying support here for someone to build processing capacity in the U.S., which will make it easier for someone to get that funded, or someone to build something in Canada right across the border, is very helpful on that front. So I think this sort of after several decades of globalization, having the pendulum swing back again to more localization around supply chains is going to be fascinating. And again, with the EV sector sort of being a key driver of that, automobile supply chains have always been, and even more so, tried to localize things as much as possible in terms of being able to maintain a just-in-time inventory and that type of thing. So it'll be. I think it's going to be a pretty fascinating part of the market here over the next 2 or 3 years to see how that all plays out.
Well, totally. In the context of a conversation we had months ago about bifurcated pricing within nickel, right? And it seems like trifurcation might be possible. It's definitely getting difficult to predict how countries are going to react as there's a squeeze and a tightening on some of these commodities. In terms of, we've talked about, tax credits and tax barriers and, isolation with not isolation. What am I talking about? I'm talking about the trying to tie up your own local supply. In some of these, and it's just like, it's going to get horrific. Maybe not in the next 5 years, but the next 10 years. Because when you talk to these battery manufacturers, they're saying, we need to tie this stuff down. We need to tie the supply chain down now for 10 years time. And they're already, I won't say smell the desperation, but it's pretty aggressive language of, we want everything. We want all of your supply, which for a company is a, you could argue, is a perhaps dangerous route to go down, but that's what these guys are looking for. It's really going to be, it'll be really, really interesting to see, because again, the rhetoric is not, it's not like, oh, it was high and we're kind of cooling down a little bit. The rhetoric is just amplifying, getting louder and louder, between both sides. And so, where this will start to get crazy, and there's, I would say, 20, 30% risk that, in the next 12, 24 months, maybe you see China threaten to cut off, rare earths or a certain couple of rare earths, and just to sort of flex their muscle a little bit of, okay, you've pushed far enough on a bunch of other issues that you feel you can sort of push us around on now. Now we're going to give you a shove back. And again, as soon as they do that, then that supply chain reality sort of gets, becomes that much more real. And so, I think that's again, for mining companies with the right commodity in the right location, that is a real upside risk from here in terms of, what could happen, whether it's rare earths, uranium, nickel, and other battery metals. I think it's going to be pretty fascinating. Fascinating few years on that front. So, kind of sort of already happening in Australia with coal and iron ore. It's already there.
Yeah. No, true. China basically, China said thank you, but no thank you. And if you're going to try and shove us around, we'll give you a good, shove back. So Yep. No, that's a great point, actually.
Actually, right. So let's go on to other things. Obviously, copper's down a little bit, down to 9,500. Is that a surprise?
No, again, I thought it was feeling pretty toppy. And again, the whole analyst rhetoric around, when it was at 10,500, they're all falling over each other to say how high it could go and how it's different this time, which to me is always a signal that things have topped out. So, literally, since that time, prices have come off that peak and stayed lower. As I said, I still owe our discussion that I will go track down my favorite copper turning points indicators to see where those are sitting. But again, the contrast between nickel and the other base metals, like nickel. So again, going back from early discussions going on, it's things like premiums for various products. So premiums of a bunch of pure nickel products went up. Premiums, pricing for nickel pig iron went up. Pricing for stainless steel again fell off in China, but came right back again. So when you've got prices going in the right direction, premiums going in the right direction, inventories continuing to fall off, or not building even though prices are moving higher, it's again in the nickel market, it's remarkable how much is going on. And again, I think the underpinning of that too is we talked about that triangle around ore inventories and NPI prices and ore prices. And again, right now should be as sloppy a market as I thought it was going to be this year. But ore inventories continue to drop. They're all-time lows. And again, we need them to build up for the 4 months of the year that the Philippines can't ship anything because it's raining in the Philippines. So the fact that they're continuing to drop off is unbelievable. And ore prices are actually going up. Which again, I didn't think. So, all of that data suggests that, we're in terms of nickel pricing, through the balance of the year here, things are pretty well supported at these levels, and the risk is more to the upside than the downside at this point in time.
And that's despite nickel ore inventories in China falling.
Yeah. Oh, yeah. No. Ore inventories are falling. I mean, again, they should be going up by several 100,000 tons per week. But they're actually they're heading in the opposite direction, which is again, I think the strength in demand for nickel pig iron production in China, which again was supposed to be all squeezed out by new supply from Indonesia. But again, the number from last week I think was 28% growth year to date, year over year in stainless demand and production is just that's a big number. So it's very, very encouraging, from my perspective in terms of where we're at.
But it's also, and the other thing you just mentioned in the Philippines, with things like shipping rates to China are going up, costs across the board are going up. I mean, even the Chinese are going to be, hang on a sec.
Yeah,
this isn't working for us.
Oh no! I mean, shipping now is to ship ore. Again, just to give people sort of the relative numbers of each of them. So, to buy a ton of ore at the port in China has been trading sort of $65-70 a ton, and a year and a half, 2 years ago, it was $8 to $10 a ton to ship the ore from the mine in the Philippines to that port. Today that's well over $20 a ton. And so, that means the miners getting paid that much less, and they have much less incentive to mine more ore. So, which again is, that Philippine ore is one source of marginal supply that's getting a little bit squeezed because that transportation, pricing, is soaking up some of that, profit margin.
So what's happening with NPI prices then? Are they static or?
And again, NPI prices are, again, everything's heading the right. Ore prices are trending up a little bit. NPI prices are trending up a little bit. Stainless steel prices are trending up. So when you've got the whole sort of supply chain all heading up, that's a huge amount of support. And again, where I will start to get nervous is if I see stainless prices roll over, and then you start to see NPI prices roll over, and then you start to see, ore prices, roll over. That's what I was expecting to happen at this time, at the end of last year. If you said, what's going to be happening mid-year, that's what I would have said, just because of the seasonal nature of what happens, plus all of this nickel pig iron coming from Indonesia that the market needs to absorb. But demand growth from that sector has been, far and away, more than able to soak up everything that the market can provide. And you're seeing LME inventories drop off as well. And again, LME inventories, particularly in nickel, are really the metal of last resort. It's the stuff that no one really wants to use. So it's usually the inventories are made up of two things: Russian cathode and nickel briquettes. And so now briquettes are the preferred feed for making battery grade, for making sulfate, because they're basically a bunch of tiny particles squished together, which are good for dissolving. But the problem is in any of the alloy steel or stainless steel businesses, when you put that into a furnace, all those particles break apart and a bunch of that nickel goes up into the chimney, which is not what you want. And then the cathode, they're literally big bundles of cathode. And again, if you think of automated loading stuff, big sheets of solid metal, not particularly, attractive, and sheets of very hard metal that are expensive to chop up into smaller pieces. So, the fact that, again, you're starting to see LME inventories really start to come off is suggesting that, I can't get the product I want from my local producer or any global producer. I have to go call up a trader and say, hey, I will take that bundle of cathodes, or I will take that, chunk of briquettes off. So, I'm very pleasantly surprised just how robust the market is for in the nickel space right now, which is, I think, portends well for the end of this year, which is when I thought things were really start to get exciting, and into 2022.
You remind me of a story. I think one of the best investments I could have done, and I wanted to do, was with, you described that scenario where you kind of put the briquettes into a furnace and all these fines kind of like float up. You can want to stop all of that. And the company that approached us was a company which had a binding agent solution, because typically the industry uses like cement and molasses and a whole bunch of stuff, which just is not very conducive to running an efficient process, where you have to keep, shut things down, let it cool down, clean out the crap, and then get it, crank it back up again. So this thing's down like, 1 month of the year for cleaning. Right. So not good. And these guys came with a solution which would, have negated all of that. So your production time would have been increased by, considerably, right? And the issue with these guys is they were 78 and 81 years old, respectively. Now, nothing wrong with that. I hope I get there myself. However, when running a company, there are some issues. So, it was one of those things. I wish I'd been able to get that thing over the line, because the idea was quite good, but they were not going to let go of the firm grip of this technology for
rip it from my cold
dead hands, which would have been ideal. But they wanted such controls, because there's nothing else to do. I suspect a little bit of it, but it's a big problem you mentioned there, and the one that got away from me. Yeah. In terms of binding agents.
We all have those.
Terrible. Got a pang, having a heart attack. Well, look, let's talk about some companies. I also want to introduce some names that we've not talked about before on this, certainly on this show, but they've got a bit about them, so it's worth looking at. The first of that is Poseidon, which I don't think we've talked about, have we?
I've mentioned a couple times, not too often. It's a past producer. It's the highest grade. It was the highest grade nickel mine when it was one of the highest grade nickel mines ever that operated. And they're looking to restart it, and they've discovered a new ore body there. Again, run by a great guy named Peter Harold, who ran Panoramic for a long time. It's got private equity money. Andrew Forrest owns a chunk of it. So it's very well supported. And so, and they there's only two nickel mills in Western Australia. One's there's three: BHP, Poseidon, and Western Areas further north, but Western Areas keeps that one pretty full. They've been drilling off this new ore body, and it's going well, and it'll be in production next year. So it'll be again, good to see some incremental nickel production come out. But one of the things I want to highlight to people is take a look at those grades there, those grades thicknesses, and again, it should be a relatively low cost mine. But again, it's not. If you want to get some idea when you see high grade intersections and what kind of real true width do they need to be, what kind of extent do they need to be before you can think about actually putting a mine around it. Those Poseidon numbers are sort of a good, and again, they're drilling in a very systematic way. So it's easy, right? They're not a promote on this part, really easy to see, what that looks like. So if you want to see what a real high nickel mine looks like, that's a pretty good, and I think you'd be a little surprised at sort of, the grades and thicknesses that you need to see versus some of the other intersections that, people are promoting a project, are going to be talking about. So, a good one to keep track of. And they've got a larger low grade deposit too, that's nearby. So that's one to definitely keep an eye on.
Okay, we'll put that up there for sure. Okay, we might even do a bit of digging ourselves on that. Next. We have spoken them on occasion, but not too much, and probably not very favorably on occasion, is Horizonte Minerals.
Yeah, no, it's good.
Good news. Good news.
Yeah, the update on their financing process. So again, the world needs more nickel projects. So it's good to see them advancing down the financing path. Again, with investors, just, these things take a long time. Like it's not a quick process. You're looking generally, probably 18 months to put a syndicate of banks together to provide this, project financing package. So, I think, that's about where they've been. So I think, it's good to see them, look like they're, they talked about things going to credit committee at the bank for final approval. So, it sounds like they're making good progress on there. And again, it'd be nice to see another new nickel project out there, because God knows we need as much nickel as we can outside Indonesia.
So this is for one of their projects. This is the Araguaia project in Pará State.
Yeah, this is a fair nickel project. Yep.
Right. Okay. And then hopefully we'll get news at some point further, in the next while on their second project and see what they've been able to do there. That'll be interesting. Yeah, for sure. Okay, so that's good news. And then I'm going to pronounce this wrong. Lunnon. Yeah. So Lunnon.
It's a recent IPO. They have the Foster and Jan mine. They're past producers. So Beta Hunt, from my past life, is at one end of Lake Lefroy. Foster and Jan are at the other end of that lake, on the same set of structures. So, if there's, again, Beta Hunt was originally a nickel mine with the gold sitting underneath. Those same structures go right across the lake and end up, we believe they ended up down at the other end of the lake there. Now, it's a joint venture with Gold Fields. I don't know whether they have the gold rights as well as the nickel rights, but again, the potential for some of the same stuff that you see at Beta Hunt, may exist down at that mine. So we'll see how they go. They're some good ex-Western mining people who are involved. Liam Twigger, who's a big Australian mining banker, is the chairman of the company. He's also chairman of the company in Ecuador that's had some governance issues that he came in to help manage. SolGold, yeah. Right. So he's also the chairman of SolGold. So, again, some pretty good people involved with that company. So it'll be interesting to see how they track.
Interesting. And then here's one. We have mentioned this one a couple of times, but we've never really. It's only been in passing. That's Palladium 1. Actually, I'm speaking to Derek tonight.
Oh, very good. Yeah, no, Derek's a great guy, and again, some tremendous. We put out a drilling results release the same day they did. So we are the two barbells, the opposite end of the barbells of the drilling results. So obviously, ours were several hundred meters, at 0.2 to 0.3%. He had a couple meters of 4 or 5%. So the good thing is, if you are able to extend multi-percent nickel over any kind of strike length, that starts to get exciting. They've got some good exploration people involved in the project. And again, this one is, I'm not a geologist, but appears to me to be somewhat similar to Centaurus, where you've got these, chutes of nickel in host rock that you typically don't find nickel deposits in. But again, you get these nice continuous shoots of high grade mineral, with the implication that they had to come from somewhere. So there's the potential of a some larger nickel source down below that was able to generate these high grades. So stay tuned on that one. It'll be interesting to see how that plays out. And again, it's just outside, just north of Thunder Bay, in not a crazy remote location. So again, a pretty intriguing thing. And again, it's a new sulfide discovery, which you don't really get much of these days. So that's definitely one to watch as well.
Like Centaurus wouldn't be bad at all.
Yeah.
And then there's one other Canadian company, I can't quite remember the name, put out some drill results this week.
Yes.
What are they called?
I think it's called Canada Nickel. Yeah.
Oh yes, that's it.
Yes.
I've heard tell of them. They're the young upstarts, aren't they? Is that them?
Yeah. So far so good. And again, we're not going to be putting out multi-% nickel. Again, there's a chance within the land package that we may bump into that. You find that with other deposits where you find low grade nickel sitting around, but we're able to put out some pretty chunky results. And again, what these sets of results now are about, the PEA was based on a resource that was done at the end of October last year. So, and based on up to hole 65, and today we're at hole 140. So, we've got a huge amount of drilling, and the goal is to be able to have a resource for feasibility study that's 50 to 100% larger than the resource that we had for the PEA. And again, it's not just big for big's sake. It's more about having a lot more resource tons that we can find higher value, lower cost, or both tons that we can put earlier into the mine plan. And we definitely believe that we can do that from the drilling that we're doing on the resource side. And that will have a massive impact on NPV. So, and that's going to be a key part of the feasibility study update, which will come out hopefully a year from now.
No, it's good work. I think the feedback on the PA has been pretty universally well accepted from what we can see anyway. Have you had any? It's been negative feedback? What are the sort of questions that people ask where they perhaps haven't understood what it is that you're trying to do?
The biggest one is around the stainless steel part of it, in terms of that downstream path, and why did you go that thing? I thought everything was EVs. And again, that is the most technically feasible, lowest risk technically, using proven technology path to market. That's also the highest value for us right now. By the time we get to feasibility study, I will have a path to market that includes something that goes to the EVs. But, the big plus for us is, again, having a path to market that doesn't currently include Glencore, Valley, or the other current nickel smelters, or doesn't depend on the EV sector. It gives me much more negotiating leverage over both groups to say, I'd love to do business with you guys. I'd love to have long-term offtakes, but, I've got another path here to market that's pretty straightforward. And so, if you want my nickel, you're going to have to, be able to generate, similar, kinds of returns for me, to be able to make it worth my while to go down that path. So, it's that I would say that's the only key piece. A lot of the other serious money strategics we're talking to, the kind of NPVs, IRRs, scale, costs, and everything like that. The feedback's been very, very good. Brilliant.
Do you know a guy called Rob Edwards?
Yes.
Norilsk.
Yes.
Fantastic. Well, he came on one of our shows last week. He told it.
Okay.
Gave us the sort of potted history of Norilsk, because when he was at Renaissance and back in the day, and then obviously he's now an NED at Norilsk. He was talking about some of the path there, which was quite hilarious because he was very open about it. But it's definitely worth, because just to let everyone know. So Mark is going to be in the club. He's there to answer questions if you have any, or at least set people straight with some information if he can, and if not, we'll try our hardest to get that to you. But you should definitely go and have a watch of that. It's in the Suits and Boots show. Rob Edwards. He's great. Good value.
So Rob Edwards was a Norilsk. He was an investment banker in Moscow in the 2000s. I've known Rob for probably 15 years or so. He's a great guy. again, anyone who did business back in Moscow during a pretty interesting period of time, is going to have lots of very interesting stories to it. And he was a great person to do business with. There was a few opportunities, that we looked at, and if you talk to him, tell him I say hi.
I will. He's a very good value. He's got a few stories. I have to do one with Rob and some alcohol involved. That would be hilarious.
There we go. Vodka shots. There we go.
Vodka shots. Oh yeah, it'd have to be vodka shots. None of this fine wine dining that Brandon and I do. It'd be vodka. Right. Well, there we go. Hey, well, look, Mark, thanks. Another fantastic week. I hope you get a few days off, bit of downtime, and we'll catch up with you next week. Okay.
That sounds great. Thanks, Matthew.